Coffin is the editor of the Hard Rock Analyst family of publications. For many years, he has tracked the financial performance and funding of all exchange-listed Canadian mining companies and has helped with the formation of several successful exploration ventures. He reviews data from hundreds of companies seeking strong management and finance teams in undiscovered companies for the benefit of HRA's readers. We met up with Mr. Coffin at the 2013 PDAC conference being held in Toronto, Canada, to ask his opinion on a number of subjects. Do you think that stock markets have run ahead of economic fundamentals? Are we poised for disappointment in the coming months?
Up to now, the major markets are pretty much in line with fundamentals. I think if you look at the S&P, which is kind of the major market, the earnings since 2009, the increase in earnings is almost exactly identical to the increase in the index itself. So it's pretty much where it was in terms of a PE ratio. Whether we're going to be disappointed, it's probably going to depend to a large extent on politics and whether spending slowdowns in the U.S. at the government level actually pull back their growth rate a little bit. I tend to be a little bit on the optimistic side of that. I think the U.S., if anything, is going to surprise in the upside. The downside, unfortunately, is going to be does Europe keep screwing up, which it seems to be doing month after month after month, and does China actually manage to bring its growth rate up a little bit? That's obviously going to be very important to the sector I deal with, and that's the jury's still out on that. It looks like they are, but it's too early to tell.
So what is your outlook for the remainder of 2013 for juniors?
Hopefully less horrendous. My gut tells me we probably bottom this year, and I'm not saying that because things are going well. I'm saying that because things are going so badly. Everyone is so unequivocally negative on the entire sector that I think we start seeing a few stocks get traction. But I do want to be clear when I say a few stocks. I do think it's going to be selective. With a 2-year funding drought, there's a lot of companies out there in the junior space that are in trouble, and they're going to be in trouble through the remainder of the year. It's going to be difficult for the index to really show much by the way of gains, because I think the gainers are going to be 10 or 20% of that index, and the other 80 are going to be treading water, unfortunately.
So what in your view will cause investors to look at junior resource stocks again?
I've been telling readers for months that having been through a number of these cycles, more than I care to remember, frankly, what's done it in the past, when you get this type of a cycle where you get literally 2-3 years of funding drought and the world's coming to an end, oh my God, we're all going to die. In my experience, the only thing that does it and brings back retail traders, and it's retail traders that always come back first to this stuff, discoveries. Someone's got to pull a rabbit out of a hat. Actually, a bunch of somebody's have to pull a rabbit out of a hat. You got to see some discoveries. That's the one thing that tends to be able to overcome fundamentals, if you will, where you can get fairly large increase in a company's market value fairly quickly. And that's really what brings the traders back, because in my experience with the juniors, you've got to get the retail guys back. The fund guys come later.
So what do you feel will happen with commodities this year?
I'm expecting precious metals, or gold and silver specifically, to probably be fairly flat this year. And that's really just the other side of the coin about my comments of being relatively optimistic about the U.S. economy and thinking if it's going to surprise, it'll, no one's expecting a lot out of it, but I think if it's going to surprise, it'll be to the upside. That's good for jobs, employment, and all those good things. It's less good for gold, because that implies probably a stronger U.S. dollar index. And of course, gold tends to trade fairly strongly and negatively correlated to the dollar index. So I think it's going to be tough to see big increases in the gold price unless things go wrong in the U.S. economy and you see traders are convinced again that the Fed's just going to. I think the Fed's going to keep printing anyway, but traders don't believe it right now because they're worried that the U.S. economy is going to be strong enough that Bernanke's going to turn off the tap and take the punch bowl away.
So what are your favorite resource sectors to invest in this year, and why?
Well, notwithstanding that comment, I mean, I still like gold and silver, and it comes back to the sort of looking for discovery stories. Gold and silver simply have more appreciation and a broader audience than most other things do. I mean, I think base metal, if I'm right about the U.S. economy and hopefully we get a bit more traction in Asia, that should be okay for base metals. I mean, they may have decent years, but base metals just don't have the pull when it comes to investor sentiment. People, rightly or wrongly, think they understand gold and silver better, so companies that make impressive gold silver discoveries just get a lot more traction. So I'm kind of sticking to those sectors, but I am looking for you know, if I could find a really strong copper exploration story, I'd probably jump on that too.
So do you prefer gold and silver as investments, and if so, why?
I own a little bit of it, but I tend to be I'm an equities guy. I suppose someone that was a straight hard money guy could make a good argument that really we should all be going out there and buying a few ounces simply as not just as an insurance policy, but that it's a sensible thing to do. If we're going to play these stocks, we should probably be buying the underlying commodities to help ourselves out. Mm-hmm. But my experience and my background is with projects and with companies, so I do tend to play the equities.
So do you think junior markets have found their bottom, or should we anticipate a further slide?
I think they have found a bottom, but like I said, I think the turn is not going to be fast, and I think it's going to be selective. So if you're looking at, say the venture index, which is a very broad index, they count most of the stocks in the venture. I don't see that turning right away, simply because it's going to be such a small number of companies that start getting traction that we're going to have to see a few guys make discoveries, some better commodity prices, and these things, it tends to be a ripple effect. It's got to get to the point where it starts pulling a lot of companies with it, where hopefully a few companies in a few areas start getting traction for those areas. That's when the whole index will turn, but it could go down. It could go down another 10-15% before that turn starts, even if you've got companies doing well, just because a whole lot of companies are going to be doing nothing.
So in the summer of 2012, when gold prices were being pummeled, you were quite optimistic about its chances, and the year ended on a high note for gold, proving you right. Gold is under pressure again, so where do you stand on gold's prospects for 2013?
Well, I started out this year not really expecting much in the way of gains from gold, but that said, I was making those comments when gold was about $150 higher than it is now. So so far I've definitely got the no gains part of it right. I wasn't expecting it to get quite this weak, but with some optimism about the U.S. economy, that makes me a little nervous about gold, just because I think the U.S. dollar index will do okay. I mean, really, in terms of any kind of quick turnaround, there's two things that could help that. One is that there's an enormous short position on the gold market right now. That's a speculative position. It's not hedgers. It's not guys making a political, philosophical argument that are gonna hang on to that position till death. It's a bunch of traders. If it starts going the wrong way, those guys will simply start closing those positions out. So there is potential for a fairly fast upward move, strictly based on internal market dynamics on trading. On top of that, to help hold that, I think the best thing that could happen would be, frankly, Europe not messing up for about a month or two, stop electing clowns, because the euro is sort of the big pair trade against the dollar, and the euro getting any kind of traction, it's been doing part of the reason why the US dollar index is going up is because the euro is going down. The euro getting any kind of traction would help the gold price, because gold and silver tend to trade with the euro. I mean, they're trading against the dollar the same way as the euro is, but it's the big pair trade. So any kind of light at the end of the tunnel in Europe would help the gold price a lot.
So what are some of the best newly emerging gold districts, and what do you like about them?
I like the Dominican Republic a lot. I mean, I follow a company there called Gold Quest. They made a very impressive discovery last year. It was one of last year's discovery stories and got a really big run out of that. It's come back some because their first holes were so amazing. Unfortunately for them, you can't live up to holes like that because they were so ridiculously large. But I've seen the data they're putting out now. They've done a lot of broad-based geophysics IP. They're going to start testing targets away from where they've been drilling in the small area they've been drilling the last year, and I think they got a pretty good shot at finding more zones. And the Romero zone there is very impressive, and I like that belt because it's not just Gold Quest. Unigold's got a very interesting looking discovery there. Eurasian's got a very interesting discovery. A company that I'm very involved with, so this is not a buy recommendation, called Precipitate Gold, also has projects next door to those guys, and I was part of the reason they went there because I've always liked the DR, specifically because of Gold Quest. I think that area's got a lot of potential. It does have a new government. It has new mining directors. One problem that the country's had in the past is it's just been very slow, like just getting concession approvals and stuff. It wasn't that you didn't get them, it just took forever. But the new mining director is a very pro-mining guy. He comes out of the mining sector, and he's promising to speed all of this stuff up, and I think that'll help them a lot too. It'll just make it easier for companies to get in there. Another place that I think is going to get traction again, it got a little bit more negativity about it than it really deserved, and that's Mexico, because there were issues with drugs and all that stuff. But those issues take place in very specific areas, and people that know the country know where to be and where not to be. It's still a great exploration destination. I was looking at Sonora a couple of weeks ago, and there's 4 or 5 new mines there. None of them are particularly high grade. They don't look like wonderful deposits, but they were all very inexpensive to get into production, very low cash costs. They just work really well, and I think that's going to get a lot more traction. And there's a couple of companies. One company I followed that's in Sonora, we followed them forever, really, since listing. It's a company called Silvercrest. They're one of those success stories. They're in production now. They've got a very large silver resource in Durango that's getting a lot larger fast. Another company that actually just put out news this morning that we follow that's in Sonora is a company called San Marco Resources. I like San Marco because they're very good at target generation. They're very good at finding good projects. Of course, they've had the same problem as everyone, which is finding money to go with the projects. They sort of solved that problem this morning. They've done a couple of joint ventures with Exeter. Exeter's got to spend about $25 million to earn interest in 2 of their projects. I think that's probably going to get both of those companies a lot more attention and traction.
To get more great interviews with our experts, be sure to check the Education tab on smallcappower.com and be the first to know by subscribing to our daily newsletter.